Before living in America, I used to live in Europe and I was born in Africa. So I traveled quite a lot and I spent a considerable amount of time in these other continents, in these other cities. And it gave me a little bit of a shock when I decided to settle down here in the US because I did made some more reservations around three main mistakes that I see Americans or most Americans are doing in spending their money. Hey guys, my name is AC and welcome again to the Money Game with AC. If you're new to the channel, please consider giving me a thumbs up by liking the video. And if you want to hear interesting videos around how to manage your money and retirement and investing in the stock market, please consider subscribing. Now, I want to get into this video, guys, and share with you three main mistakes or three big mistakes I see most Americans doing with their money. And it's not really about, the amount they end up spending in X or Y, but it's really the opportunity cost they are losing. In other words, this mistake, quote unquote, might end up preventing them or causing them to lose millions of dollars in the long run. So without any further ado, let's get into it. The first thing here is that that I notice is how the US economy is really depending on what we call domestic consumption. It's really rare as an economy to see that the US economy is growing based on 2/3 of the Americans spending money on stuff that are being produced and spent for Americans. In other words, 2/3 of the US economy is really depending on consumption. A little bit of that comes from exports or maybe stuff that we spend on other stuff, but mainly if we are not spending money on the economy, well, there might be not growth. That's why a lot of people are arguing about recession fears coming in the next coming months, maybe in next year, and with multiple areas around how critical it might be. But that's going to be the subject for another video for another time. The first mistake I can see here is, of course, you may be kind of guessed if you live in America for quite some time now, we spend a lot money on food. Americans spend an average of $2,375 per year on dining and takeout. Now, if you do the math, that's almost 2,400. So 2,400 divided by 12, that leaves us with what? Almost what? A little bit less than 500, not 500, but a little bit like, 350. All right. So that's a little bit quite a budget to spend just at the end of the month, just on dining and takeout alone. This doesn't include groceries, because when you add groceries to that, it's another chunk of money. As a matter of fact, this is coming from the Bureau of Statistics, and they're saying that for most Americans, dining out and ordering is a regular part of their routine, which is kind of one of the things that surprised me, because in Europe, for example, we only go out and eat out on, out with friends and maybe family on few occasions, not only. I mean, of course, people do that on a regular basis, but the norm is not eating out most of the time, all right? And definitely not spending that kind of money on food outside. Now, if you add the amount of money that we are spending on groceries, it can add up pretty quickly. Look, the average household spends almost $200 a month or $2,375 annually on food prepared away from home. That was the, dining that we mentioned earlier. But if you add groceries or food related expense, Americans spends $412 per month on groceries. So totally, we are kind of adding up to food cost around $610 per month. So $610 per month, that's quite a budget. That is quite a budget. That is $7,300 yearly. Keep that thought. Let's jump into the next big mistake. The next big mistake is around auto loan, of course. The first thing that kind of, struck me out when I got here, through George Bush International Airport here in Houston, Texas, the very first time I entered the United States of America, I was amazed how cars were big, how cars were new, everything was just amazing, as if everybody is rich in America. But as I started living here and kind of discovering how the financial system works and the economy works and people are managing their finances, I kind of guessed that, As long as you have a job, then you can have whatever kind of car you want. So I can make $2,500 a month and drive a $100,000 car. Yes, you heard that right. So in average, the average monthly car payment for new cars is $665. This is coming from bank rate as of 2022, especially with auto loans payments with interest rate increasing are supposed to tip a little bit higher. The average monthly car payment for used cars is $515. That is still above $500. So if you're somebody in the regular routine of spending money in America, you're already spending almost $600 on food, groceries, and dining out, takeaway, taking out food. And then you have $500 to $667 that you're adding to your car payment, whether your car is used or new. That is already $1,200 just on things that you necessarily do not need. Let's continue. So that's the second thing, all right? Now, the third thing, which I consider that most people don't pay a lot of attention to, and it's quite a mistake here, is saving for retirement, thinking about when I'm going to be old enough and weak enough so that I won't have strength to go out and work by exchanging my time with money and earning income to have a decent lifestyle. Look, the average US retirement savings in America today is almost $170,000. This is a survey. $170,000. Okay, what can you do? Let's just say you are retiring tomorrow and you have in your retirement savings account $170,000. If you were to take just 4% interest on that money, it's not even equating to $1,500. No, it's not. So it's not enough, because you should have at least $2 to $3 million in order to have the same lifestyle you were having when you were still working actively in the job market. Not counting one of the biggest expense as you're starting to get older, which is medical expenses, because as you get older, your health tend to decrease, and with that comes cost of exams, and because you will frequently go to the doctor because you're expecting to be living a little bit longer. So how can you, and I mean, how do you expect, or how people expect to have a decent lifestyle when it's time to enjoy life but with no money? Because as we get in time, as time passes, things tend to get a little bit more expensive. That's because of inflation. All right. So you need to be able to, if not replacing the amount of money you're making now, but you need to even make more money. But because you only have 24 hours in the day, and you cannot just, you can only do this much by trading your time for money. You need to find a way to make sure that your money will work for you while you sleep, and at the most faster pace than just 2% a year, which is the yearly average we're expecting for inflation. All right. Otherwise, your money is decreasing in value, and that's not good. So if we add up a little bit on these two things, $667 on car payment, average car payment, especially new car. All right. If we're taking how much money in average people are spending on food per month, that's $610. Now that's already $1,200 per month. So if we were to have investing $1,200 per month, starting with zero for the course of 25 years, this is exactly how much of a cost of opportunity we are losing. $1.5 million. You heard that right. That is what we call the cost of opportunity. By just going with the flow and spending that kind of money on food and transportation and new cars, you are costing yourself $1.5 million, especially as most people will end up having just $170,000 in their retirement savings account. But it doesn't have to be that way, right? Because first off, you can cut on these $610 per month, right? You can spend less money eating a lot more healthier and saving a lot more money by just cooking food at home. All right. As long as you have a gas line or a cooker, you're good to go, right? Then you don't have to necessarily drive the latest and coolest car in the market. That's why when I got here in America, I made sure I bought a used car that I bought for cash. All right, because I didn't want to end up paying that money, because by paying this amount of money, you're making somebody else rich. So instead, why don't you use this money and make yourself rich? Because by just investing $515 in 25 years, which is the average, amount of time everybody spent working, between 25 or maybe 30 all the way to 55, to retirement, then you can make sure that you will have $630,000. I took 10% here as a rate of return, which is what the S&P 500 or the stock market has in average return since inception, since the stock market was created. All right. So I guess this put things in perspective, because it gives us a sense of, well, what is your priority? Is it your priority to actually, kind of go with the flow and making sure that, the next Silverado or the next Nissan or the next, Ford that is available out there, you have to have it. And then in 20, 25, 30 years, not having enough to have the same level of quality of life you had when you were working, or, make sacrifices now so that your future self will thank you for what you did now, and you have much more time to enjoy with your household, your loved ones, because you will have those sacrifices that are going to pay off if you are just a little bit patient. Does that make sense? Yeah, I think so.